Joining us at Post 9 this morning to discuss, Trivaria Research founder and CEO Adam Parker, who says it is prudent to sell some financials. There could be problems continuing for banks. And RBC Capital Markets head of U.S. equity strategy, Lori Calvasina, S&P target of 4,100. It's good to see both of you.
Thanks for having me.
If you're going to sell a bank, which one do you sell?
I mean, I just look at this, and we talked about it a little last week when things were really, first going south, I'd say, or starting to really feel worrisome. I mean, what do I trust? What do I not trust? Sarah was just kind of asking a little bit about that. And what's the horizon I can believe in? I mean, Lagarde says they're going to have inflation at 2.1 in 2025. Is that even a knowable concept? Do I put any stock in that? Like, how do I, or is that just all messaging because I want to calm people down? I think uncertainty should be treated with a lower multiple, period. Okay, and this is a more uncertain time than it was a week ago or 2 weeks ago, and I should pay less for risky assets, kind of full stop. So explain to me why I should want to pay a higher price to tangible book today than I did last week for any bank.
Well, if you think they're cheap and they've sold off too much and that the U.S. government and the Federal Reserve are going to come in and they've made it clear they're going to act swiftly, decisively, and try to clean this up.
Again, like in the 2x2 grid of competency, incompetency, dishonesty, honesty, which quadrant are we in? Like, you got to say that. You got to calm people down. You don't want runs on multiple banks. But like I'm just saying, in reality, do you feel better about the banking system today than you did a week ago?
Do you? You
don't.
No
way. How could you? How could you? I mean, I only have a sample size of 150, but everyone I know has moved their money out of one of the banks that was a problem, whether it was in their venture or their private equity or their personal life or their business. Name one person who was like, I'm cool, I'm going to keep it, and I'll just let it ride and see what happens.
Well, I mean, it would be worse if yields were doing the opposite, right?
Right. The HCM, I guess, has got less losses now than it did a week ago. Great. But, I think you have some intellectually honest, tangible book that's, and you got to think about the valuation. So growth's going to be lower. They can't lend as much. They're going to be restricted by the government. I mean, those don't think, I'm not, doom and gloom. I'm just saying those don't make me want to pay a higher multiple than I did before.
Lori, I want to tap into your expertise in tech and ask you why that trade is working so well. If we're going to be dealing with macro issues regarding liquidity and lending going forward in an aggregate.
So, look, when it comes to tech, I think it's pretty simple and I think it's pretty mechanical. I would say, number one, anything you thought about interest rates a week ago, your expectations are lower now. And we can debate, whether or not we're going to get 25, 50, pause, cuts, whatever. But I do think the interest rate environment, I was hearing so many concerns about how high 2-year yields had gotten from equity people the last month or so. And we've seen that drop precipitously. And typically when we do see interest rate expectations or levels come down, you get outperformance in the growth parts of the market. So it's that simple. I think, two, I agree with a lot of what Adam said on the financials and the uncertainty being high there. What we're seeing underneath the surface, and I think one of the reasons why the S&P has been so resilient this week is its exposure to that tech space. And we're seeing, a very clear rotation out of those financials and into some of these tech names, not just short covering, but actual real rotation and real money going back in. I think that the macro really got baked into some of those growthy sectors last year, and it's getting baked into the value cyclical parts of the market with a vengeance right now. But that doesn't, change the fact that the tech space really did bake in a lot of bad stuff last year. So it's natural to see that rotation.